Hey traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and this is basically my end of month P&L video. I like to do these at the end of every month. Just go through and kind of sort through, obviously what my performance was for the month, and and basically review. It's a big step in the process of trading and investing is to do a review process and to see where you made money or where you didn't make money and where you can make some improvements, right? As a trader, that's one of the things that we always want to come back to. There's never a time where, it doesn't matter what level of experience you are, but you always, have to kind of keep things in check for yourself and make sure that you're consistently improving or at least on that road of where you think you're trading optimally. So again, very important to kind of do the review process and then also look at the observations for the month and again figure out where you excelled and where you had some problems with the month, because again, it doesn't matter if you've been trading for a long time and you consider yourself an expert trader. You're still going to have losses, right? There's still a batting average. And again, I always like to associate some baseball analogies, but the difference between in baseball a really good hitter. One of my favorite somebody asked me the other day what my favorite Yankee is, because I've been a Yankee fan all my life, and it was Don Mattingly, Donnie Baseball, and he was a very consistent hitter. He led the batting average, and what I'm getting at is he was a very good hitter, practiced a lot, and had a couple seasons where he was in the mid 300s. But it doesn't take that much in baseball. We're talking about, if you add up the hits between over a season, how many hits, a 300, somebody who has a batting average of 325, 330 versus someone who has a batting average of 220, 230. It's not that big of a difference, right? So you really have to work on these things to get yourself, and again, they're not batting 500, which, meaning, that they have a hit every 50% of the time. A really good hitter gets a hit a third of the time. So you kind of have to keep that in the back of your mind with trading as well. Is that you're just not going to have 80%, 70% winners. You're going to have ones that don't work out, and really what I've learned over time is how you handle the losers, right? Because everybody always says you got to let your winners run and cut your losers short. But really, if you're not pushing the buttons to kind of enable yourself to do that, and if you're hanging on to losers too long because your ego is in the way and telling yourself, oh, I don't want to sell this because that means I'm wrong, right? One of the things that really at some point in my career kind of turned my trading around was saying, you know what? I have more faith in my overall system than I do in any individual pick. So you'll see me cut losers all the time, or just cut trades that I change my mind on and I see something better. So that said, let's dig into a little bit of the data. But here's my performance for the month, up 12% for the month, for year to date, up 116%. So I am happy with that. Am I thrilled with the June performance? I'm not thrilled because I was at one point a little bit higher than that, and it is what it is. I forced a few trades there at the end of the month, and it kind of ate away a little bit at my returns for the month. All in all, if you look at the SPY performance and the Q performance, obviously there's been a very big deviation between the Qs and the SPYs and tech stocks and the overall market. But June, the SPY was up 1.7% for the month. So again, I feel good about that. My goal again is to outperform the market, and I did that both from the SPY perspective as well as the Qs, which were up 6.3%. Again, a big deviation, and a big deviation for the Qs, which I believe, I'm surprised they're actually not up more, but the Qs are up. 17%. Well, I guess that does make sense. They're up 17% for the year, and SPY right now, or S&P, is down 3% for the year. So again, I'm very pleased with my performance. If you want to see what this looks like too, Let's see, where do I have this here? Here's my statement, just so that you could see that I'm not making these numbers up. At Tribeca Trade Group, one of the things that we do is, of course, complete transparency. You see all my trades as I'm trading live, and everything gets posted to our trades channel in Slack. But that is my performance. So yeah, up 116 for the month and up 12 points, 11.7% or 12 points, 12 percentage points. I rounded up there for the year. So I'm sorry, for June. So that is what it is. I would say for my winners for the month, and I'll go through a couple of these. I apologize. I forgot to take a snapshot of this from E-Trade, which is where my trading account is, and yesterday, because if you let the new month begin, they don't let you you used to be able to kind of pick a range, and they don't let you do that anymore. So I'll go through a couple of the trades, because what I did in last month's video is I pointed out some winners and some losers, and how I really didn't have, I kept the losers small. I did the same thing for this month, but I think a couple of them, if you look back at my performance, if you go in here, you could see that I had a couple months in here, April, May, where I really had some strong performance, and really I did have losers in those months, but the losers were cut very quickly. I think this month maybe I got dinged a little bit more on a few names. Also, just being positioned at the wrong time, and I'll go over that in just a second. So again, that's really important. But I think overall, losers remain small. I would say again, I'm always kind of focused on the things that I did wrong versus the things that I did right. Again, a lot of famous traders do that as well, so I try to follow their footsteps. Right, a lot of traders like Paul Tudor Jones always worries about the risk rather than the return. He always thinks that all the positions that he has on are wrong, so that he's always making sure that reviewing those positions, and really making sure that those positions that he's got, he's defining those positions, and the where they're going to go wrong, and so on and so forth. So that's important. So yeah, if we go in, if we look at the month, so first of all, if we go back to the beginning of June, we got off to a pretty good start. And again, like I said, I really, if we look at some of my trades that I made earlier in the month, so again, all this you could see, like I said, full transparency that goes on in here. But I did highlight a couple trades in the beginning of the month. Let me just keep scrolling back a little bit. But again, I've really stuck to what worked. Coupa Software was a nice trade. You'll see we had this problem earlier in the month where people were highlighting a lot of trades. I don't know. I don't know why that started, but we got that to stop. CrowdStrike was a nice winner for me. So you could kind of go through. I played Square a couple times this month. That worked really well. A trade like this where we saw option activity didn't work, FISV. And again, this is a good situation to review. I'm happy with the way I handled this one. I tried to make this one into a winner. Again, we saw a whole bunch of positioning going out to, I think it was September and then December. Whoever was doing this was not right. And so this ended up, I think, being a loser. At one point, I hit one target in the trade, and the rest of the trade was a loser in the trade. So really making sure that I cut these positions and not let them develop into big losers, because if I would have kept this trade on, it would have been much bigger of a loser. So again, important to kind of look through some of these, but really I didn't have any major issues with my month. And if we go back to the S&P, just this wasn't even that huge of a bad day for me, but of course I did get caught in positions. And one of the things that, and again, I'm not making any excuses or anything like that, but I need to follow a little bit better what I'm telling the room. So what I tend to say, which I'm pretty good at, giving myself a little bit of a pat on the back, But I'm really good at telling members, like, hey, here's a good place that you may want to think about, taking some profits. And of course, by the way, I forgot to say this in the beginning of the video, but everything that we're going through is for information purposes only, not giving out any advice or recommendations. We don't do any of that in the trading room. I'm basically just providing information. But what I try to do is basically say, hey, I think this is a good place to take some profits and to be mindful of your positions. I think one of the things that really hounds, younger traders or more inexperienced traders is they load up on a lot of positions, right? They load up on having too many short-term positions. Many of them trade too many option positions, and they have too many short-term positions. Now that works fine as long as the market continues in a straight line and that's up, because most traders are playing on the call side. So if you continue to go up and fast, you're going to do fine. However, if there gets to be just the slightest amount of volatility or even sideways action, your short-term option positions can really put a big ding into your P&L. So that's one of the things that I try to mention to traders a lot. We've had some nice midday videos where I've said, hey, make sure that you're aware of this. The market has basically gone up 3 or 4 days in a row, and I think I did actually have put together a nice video on this and said everything has been going up. Be careful of your short-term positions. And I think I really helped some traders, once we had one of these days. I think not everybody, but I think some people really took down their short-term exposure and didn't get beaten up too much on that pullback that we saw. So that's the whole name of the game with trading, is to really try to minimize, to maximize gains when the market has a nice upswing, and then not get caught and not add too much, too much risk into, in the beginning of a red day. Because again, I like to go over experiences and try to give you a sense of where I've made mistakes before. And I'll tell you, I've made mistakes when, right where the cursor is. Sometimes, when we haven't seen volatility in a while and we start to see a red bar, everybody wants to come in and buy the dip. However, if it's a sustained move down and you start adding here, now granted, that's not as painful as if you put on positions up here, but if you buy the dip here and we get a huge washout day, that could really cause you some pain. So I think that was one of the things that kind of helped me a bit. Sometimes we don't know how the day is going to turn out. This happened to me the other day, and with one of these red days, and I think it was on the Russell rebalance day, where you just don't know. Whenever we see a little bit of red on the tape, sometimes we see traders basically come right back in. I'm sorry, we see buyers come right back into the market and take advantage of the dip. But sometimes that's not the case, and that caught me on just a few days ago. I went long some Nvidia, and it just basically just kept on getting washed out. So something like that, I think that was one of my bigger losses for the month. And things like that where I did not honor my stop. So that brings up a good point in the review process, is to make sure that when you are setting up your trades, that you are establishing, where you think, of course, you're going to take the position off and where your stop price is. Now, of course, you have to honor the stop price as well. So that's the whole thing. And I think on that one particular day, I didn't do a good job at honoring the stop that I had set up. So I turned a little loser into a big loser. So I had a couple of those. And again, those are things that once you experience them, you realize, hey, I need to really get back to some discipline. Stocks versus options. So again, while most of my losers remained small, I had a couple dingers like that, and again, that ate away at a little bit of my performance, because I think at the height of the month I was up like close to 20% or something like that. So it is what it is. Also, one of the things that I've said before to members is that, and I think I have this down here. don't trade just to trade. Every trade should have a plan. And also just realize, try not to force trades in a bad situation. I've told traders, and I actually said it today because it's the first of the month. Tomorrow is going to be, a full trading day, but it's going to be a 3-day weekend. And if you had a decent week, there's no need to kind of push it tomorrow. And I've said before, hey, if I wasn't running a trading room, I would just take the day off. Or I would come in the morning and and then leave, go out for a really nice lunch, and then come back for the last hour of the trading day. You can do that. Get comfortable with doing such a thing because again, the closing print is most important. So when you think sentiment is running hot and you've done pretty well, and because sometimes your confidence level when you get a little bit overconfident, that could be a big detriment to your trading. So take breaks. There's nothing wrong with taking breaks. It keeps you refreshed. I know some people I can't wait for the 3-day weekend that's coming up because it allows me to kind of get perspective and so forth. Breaks are important. Some of these guys on Twitter, they never take breaks. Either that is a confidence problem that they think that they're going to miss something, or they've got a gambling problem. So these guys who never take breaks on Twitter, and they're upset when the market is closed for a day, that's not what this is all about, right? That's if you basically have a gambling problem. What really helps in terms of trading, and if you're doing it well, is to take those breaks and take breaks when you think sentiment is a little bit running too hot. So that's important. I'll also say for observations, I think I skipped around here a bit, but buying the dip has really worked. In this market, selling the rip has worked as well. Chasing is tough. If you chased a couple days, especially like into this last move up, thinking that this was going to just continue and maybe that VPOC was going to get taken out, it can be quite painful if you're adding positions at the wrong time. So be mindful of that. After multiple days, you could still participate. There's things that you could do to trick yourself. You can reduce your position size. That's one of the tricks that I do in the room when I feel like sentiment is running too hot, but we're seeing a whole bunch of call activity and a lot of trades look pretty good, is I'll drastically reduce my position size. So that helps, and as well as just taking breaks. I talked a little bit about stocks versus options. I could tell you from experience, I'm always cognizant of how many swing option positions I have on. It doesn't really matter what the market is doing. If I start to get too many positions on, like I said before in the beginning of the video, all it takes is a little bit of volatility and you're gonna get dinged pretty quickly. So making sure that your position size is appropriate, as well as the quantity of positions doesn't get too large, because that could be a recipe for disaster if you get caught on the wrong way. So those are all things that have kind of helped me. These are all things that I'm putting in this video because they're reminders to me, just really not to have a lot of positions on in my trading account, and to slim things down. Also, by doing that, if we do get some market volatility, which this market seems like it will get from time to time, if you have less positions on, you could focus on the next move versus, because there could be some good buy the dip opportunities. But if you're forced to manage a bunch of existing positions, you can't get into the new opportunities, at least as quickly. So I would say be mindful of that. So that's basically it. We'll continue. Obviously, this market has a breadth issue, right? Where there's only a few groups at this point that are doing the heavy pulling in the market and that are fully breaking out to the upside. And there's a lot of areas that are struggling. And until the vaccine numbers go down, I think that's this type of market is going to continue to trade that way. And there will be eventually profit taking in a lot of these growth software names. So you just have to be mindful of that. And I think that goes back to quantity of positions. Just have to make sure that you're taking profits when we have a nice swing. And when, if you're in 3 or 4 growth names and they're all, up to the upside. Like today, for example, you look at Shopify, Square, Amazon, ServiceNow. These names were all up big, right? And that means you have to take advantage of that and sell some things into that. Again, don't have to sell the whole position, but in my trading account, different than some of my other accounts, that's the whole key. All right, so I think we kind of covered everything that I wanted to. Um, the one thing that I forgot to say in the beginning, which I have right in front of me, is my little Bill Belichick analogy. My football. I talked about batting average in baseball, and you just have to realize that not every trade, just as any great baseball hitter comes to the plate, they're gonna be out 75% of the time. Sorry, not 75, but 66% of the time. An average hitter will be out 75% of the time, or gets out 75% of the time. A really good hitter is gonna get out 66% of the time. So you kind of have to now. Hopefully, we're going to have more winners than that, but you have to keep that in your mindset that just not every trade is going to be a winner. So really how you manage these situations is important. So that was my baseball analogy. My football analogy every month is Bill Belichick. Not the most exciting guy to listen to in interviews, but he gets the job done. One of the things that the press always asks Bill Belichick every interview, in the middle of the season is, hey, do you think you guys are going to win the Super Bowl this year? What's your outlook for the playoffs? And what he says every time is, we're going to concentrate on our next opponent and winning next week. The reason why, I think if you look at that, and it's good to have goals, but if you're concentrated on what's in front of you, and if you win 1 month at a time, you're going to have a great year, right? You're going to compound your returns, and you're going to have a good season, or in this case, a good year. So regardless of what you did, positive, negative, frustrated, not frustrated for June, get it out of your head. Focus on July, because that is not going to help you have a positive month for July. So forget about it. One of the things that you could do too, that some traders do, is they take off all their positions at the end of the month, so they can basically wipe the slate clean. Don't be afraid to do that as well. If you haven't done that, I tell you, I try to go through that exercise as I get towards the end of the week, just so I can dial back my exposure. And it's nice to be able to sleep it well too. And if I'm positioned a little bit more neutral and take off those positions, I can do that, and I come back refreshed. So, I did that, for example, today. I took off a couple smaller positions that I've been hanging on to for a couple days. Both of those were option positions. And you have to realize, too, that option positions, they don't age well like a fine wine, right? There's decay in those positions, so you could always get back into those positions. So anyway, that's the end of the this month's P&L video. I hope you find that helpful. If you have any questions, you could always email me or direct message me in Slack if you're a member. Thanks for watching, and have a great rest of your day.